It's a tale of two markets. If you look at it from a year-to-date standpoint, you miss the whole movie. The year-to-date, obviously, has been lackluster, but that's not the story that should be told. It's where we are from the April bottom. The S&P is up 27% from the April bottom. The NASDAQ is up 36% since April. Last I checked, we're not even in July yet. That's the story.
I think if you look at the movie short, actually, that time period, it actually would make you a little bit more cautious. I don't think it would make you more optimistic. I actually think you should look at the overall time period, because when we came into this year, your expectations were obviously not for the type of double-digit, low 20s returns in the S&P 500 that we had been delivered the last 2 years. Now, what were the catalysts that you were waiting for? You were waiting for the potential catalysts around the tax bill. You were waiting for an expansion of CapEx. You were waiting for some of this deregulatory impulse, which frankly hasn't really come yet. What we're seeing is a lack of enforcement of regulation. That's not technically deregulation. We actually need to see follow through on that. But I think what you're asking, Scott, is at this inflection point, is it the time, based on the strength and the momentum in the market, that you want to feel more comfortable adding back into your positions in the U.S., or do you want to actually continue to look for these broader opportunities? That is the question, and I think that it comes down to, in the second half of the year, do you think that some of these pro-business forces are actually going to catalyze stronger earnings growth than we have seen or have expected or is estimated? And our view is that in those industries and sectors, there will be stronger earnings growth based on these catalysts. And so you can justify some of the run-up, maybe not in the individual stocks that you're discussing that have been the leaders thus far in this quarter, that broadening out actually can bring other stocks into the market rather than just relying on the force that has driven second quarter performance.
What do you think? What do we think? What do you guys think?
I personally think it was driven by fundamentals. These are earnings-based concentration. Those stocks have been the best performers from an earnings standpoint. I do agree with you that I think you can get a broadening out because, if we get rate cuts, if we get some of the certain things that we would hope to see that drive earnings, productivity from AI, you name it, you can get a broadening out. I don't think that is today. I don't think it's now. That is all predicated on what the Fed does, and frankly, it's all predicated on what happens to the dollar if you're hoping for international. Do we continue this downward trajectory to maintain that type of momentum? So I think we're going to be concentrated while we are having this positioning chase, and ultimately, I think when you want to get cautious is when you see skepticism fade.
Well, can I counter that? Yeah, I'm actually not questioning the fundamentals of the stocks that many of that you've laid out that have performed well. I'm not questioning that. Right. What I'm stating is that I think the impact of the Fed through the second half of the year is overstated from a transmission perspective. I think the one area where actually it will be boosted is in small and mid-cap stocks, because those are perceived to be much more interest rate sensitive. But if you're waiting on the Fed to deliver in the second half of the year the gains in the equity market, you're probably mispositioned in my view. Okay, so then I gave you the angel view on the shoulder of the bulls, okay, of the market. Now you go the other shoulder, the devil's over there, and he's like, maybe you guys are all too complacent. Do you really think this tax bill is going to get done nice and clean? Do you really think that tariffs are not a non-starter? Are they not going to be a story because the market feels like it's desensitized to it? Do you really think that there's not going to be this lag effect from what's already been done, and then the market and the economy is going to slow more, the labor market is going to slow more? Do you really think that the Fed's just going to come to the rescue and cut rates and don't fight the Fed? What about all that? What about that side of the debate?
Well, you need those things to be in place, or the S&P would be at 30 times earnings. Like you need there to be a wall of worry. I don't know. I'm doing this show since 2011. There's nothing to worry about.
Is one side going to win out?
At the top.
Is one side going to win out, or do you just play this market? Look, the whole thing at the top, we said, what's your new high playbook?
Define winning out.
You play the market you have.
Can I keep it a buck with you? We're in a bull market, okay? Yeah. So we had a cyclical bear market. In my day, they used to last an average of 13 months. The last one lasted 3 weeks. But we had one. We were down 20% as we repriced. Obviously, tariff risk. Obviously, layoffs and things that might take unemployment to a point where it's like a no return. Like we did that pricing in, and then the cardboard cutout thing was thrown out the window, and everybody had to reprice back, and that's natural. That's how markets function. But look at stocks. Look less at some of these headlines, and just look at the way the stocks are behaving. My 4 biggest positions all made record highs today. Not 52-week highs, record highs. NVIDIA, yeah. Okay? It just went. No reason, no catalyst, no news. Just
that noise?
Goodbye. Take a look at CrowdStrike. Broke 500 today. Boom. You like that noise better?
I did.
Okay.
No, I like it.
Shake Shack.
I knew like being a kid.
Shake Shack hit 138 today. You want to know what the news is? The Dubai chocolate pistachio shake just went from being limited edition. I'm not even kidding.
To a full menu item.
To a full menu item nationwide. People are lined up. The Dubai chocolate
Do
pistachio shake.
they know you're taking a 2-week vacation? Do they know you're taking
no
a
idea
2-week vacation?
Also, a deal between Shake Shack and Delta on domestic flights, first-class passengers, which is me, can pre-book their Shake Shack order for those flights. This is a very bullish time for me. And then last but not least, Uber. New all-time high right now as I'm talking. So when I look at stocks and not, well, what are the mid-caps doing? What's value doing? What's low? It's a totally different picture. Now, does that mean just buy whatever and who cares? No. I talk about the best stocks in the market, and every time I roll one out, which I will in about 20 minutes, the idea is, well, where does the stop go? Where does the market tell you you're overexposed or the story has changed or the momentum is gone? And that way you can be in this market, but not in a cavalier way where you're just expecting a 0.5% up every single day.
Isn't that why the policy does matter? Because it matters to the individual companies that we're all looking to own. Like, Scott, the delay on the transmission of tariff inflation, it's a delay, right? Companies will experience tariff higher prices, and they will have to transmit those down.
It may be just a one-time thing, and so what?
And it may be a longer drag, right? It can take to be kicked down the can.
Nobody knows.
So in that interim period, if you have been a company that has been really watching for protection of your margins and that you have really been focused on maintaining your competitive advantage in this more difficult economic environment, why wouldn't you be able to catalyze that into earnings over the next couple of quarters? Because we haven't had the environment that you were bracing for.